Devion aur Sajano, Namaskar. Welcome to a story of wisdom, patience, and extraordinary success. Today, we talk about Warren Buffett, the magician of the stock market, a man whose name is synonymous with investing genius and financial discipline. From the quiet city of Omaha, Buffett built Berkshire Hathaway, transforming a struggling textile mill into a global powerhouse that now owns companies across industries, from insurance to railroads and even ice cream. Buffett's secret? Value investing, buying great businesses at fair prices and holding them for the long term, even when others panic or chase quick profits. He avoids fleeting trends, focuses on strong fundamentals, and treats every stock as a real piece of a real business, not just a ticker symbol. His rules are simple: never lose money and never forget that rule. He believes in protecting capital above all else. Buffett's discipline and patience turned small, humble investments into billions, proving that slow and steady truly wins the race. Despite his immense wealth, he lives simply, enjoys a cherry Coke, and still resides in the modest house he bought in 1958, showing that true success isn't about flashy lifestyles. His story is about humility, perseverance, and the incredible power of compounding, where small efforts, repeated over time, create massive results. Berkshire Hathaway isn't just a company, it's a legacy of long-term thinking, careful decisions, and unwavering commitment to shareholders. True wealth, Buffett teaches, is built over decades, not days. It's about patience, vision, and the courage to stay the course. As we explore Berkshire's recent challenges, remember, the market is a game of patience and wisdom, not just luck or speed. Let's learn from the Grandmaster himself, whose lessons go far beyond just making money. The game is on. Let's play it smart, with strategy, patience, and a long-term mindset. Stay tuned as we uncover timeless lessons for every investor. Let's begin this journey together. Berkshire Hathaway's shares have dipped recently. Why? First, the US economy is slowing as the Federal Reserve raises interest rates, impacting all of Berkshire's businesses. Second, Berkshire is sitting on over $150 billion in cash, earning little return while Buffett waits for good deals. Investors see this as inaction, testing their patience. Third, succession worries. Buffett is in his 90s, and Charlie Munger has passed away. Even with a clear plan, markets fear change. These factors, economic headwinds, cash reserves, and leadership transition, have pressured the stock. But for long-term believers, it's a test of faith, not a sign of collapse. Remember, even the strongest trees face storms. To appreciate Berkshire Hathaway, compare it to the S&P 500, the US market's gold standard. From 1965 to 2023, the S&P 500 returned about 10% annually. Berkshire, nearly 20% per year. That small difference, compounded over decades, creates massive wealth. Imagine two friends investing $1,000 each in 1965, one in the S&P, one in Berkshire. After 58 years, the Berkshire investor is far richer thanks to compounding. Buffett's genius, buying whole companies, using insurance float as investment fuel, and reinvesting profits. Berkshire's long-term outperformance is no accident. Recent dips are minor compared to its extraordinary history. Past results don't guarantee the future, but they show the power of patience and smart investing. Berkshire is the snowball that kept rolling and growing. That's the Buffett effect. Let's keep perspective. Every investor faces storms, Buffett included. The world of investing is full of uncertainty, and even the most seasoned veterans are tested by unpredictable markets and economic shocks. During the dot-com bubble, he avoided overpriced tech stocks, was mocked, but stayed true to his principles. While others chased quick riches, Buffett's discipline set him apart, even as critics called him out of touch. When the bubble burst, Berkshire's solid businesses held strong while others collapsed. His focus on real value and sustainable companies paid off, proving the wisdom of patience and careful analysis. In 2008's financial crisis, Buffett invested billions in banks when fear ruled. While panic swept Wall Street, he saw opportunity where others saw only risk. He got great deals, made huge profits, and helped restore market confidence. His bold moves not only benefited Berkshire, but also reassured investors worldwide that recovery was possible. The lesson: stick to what you understand and don't follow the crowd. True investing success comes from independent thinking and resisting the urge to join every new trend. Buffett's patience and courage turned crises into opportunities. He waited for the right moment, then acted decisively, showing that calm conviction can turn adversity into advantage. He proves that discipline beats panic and value investing wins over hype. In the long run, careful research and a steady hand outperform emotional reactions and speculation. When others are fearful, be brave, but be smart. Courage in investing means knowing your limits and making informed decisions, not just taking wild risks. Berkshire's resilience is built on fundamentals, not fads. The company's strength comes from deep analysis, strong businesses, and a refusal to chase the latest craze. Crises test character. Buffett's record shows the power of staying calm. When others lose their heads, his steady approach stands out and delivers results. Don't chase trends. Trust your process. Consistency and discipline are the real keys to long-term wealth. That's how legends are made. Greatness in investing is built over decades, not days. Learn from the past. Invest for the future. Every crisis is a lesson, and every lesson shapes a smarter investor. The tortoise really does beat the hare. In investing, slow and steady wins the race. Just ask Buffett. Why do small investors sell their winners too early, even when the stock is still performing well? It's human nature. Our fear of losing small gains often outweighs the hope for bigger ones. The pain of seeing a profit disappear can feel much worse than missing out on future gains. So, we rush to lock in profits at the first sign of success, but ironically, we hold on to our losing stocks, hoping they'll bounce back and save us from regret. But the market is indifferent. It doesn't care about your emotions, your hopes, or the price you paid. Take Rohan, for example. He sold a stock for a quick 20% gain, feeling smart at first, only to watch it rise fivefold over the next few years. That's a story many investors can relate to. The lesson here: think like a business owner, not a gambler chasing quick wins. Owners focus on long-term growth, not short-term price moves. If the company is healthy and growing, let your investment grow alongside it. Give your winners the time and space to flourish. Don't let daily price swings or scary headlines push you out of great businesses. Patience, especially during volatility, is your superpower as an investor. Tune out the noise. Focus on the company's long-term performance, not the day-to-day drama. Selling too soon is like watering your weeds and plucking your flowers. Let your best ideas blossom. Hold on to your winners, and don't be afraid to cut your losers before they drag you down. That's how real wealth is built, by letting your best investments work for you over time. How can you build wealth? It's simpler than you think. Start early. Even small amounts grow big with compounding. Diversify. Don't put all your eggs in one basket. Mutual funds and index funds are great for beginners. Ignore the noise. Don't trade on tips or headlines. Invest with a goal. Retirement, education, a home. Clear goals keep you focused. Review your plan yearly, not daily. Stay disciplined, avoid panic, and let time do the heavy lifting. Remember, investing is a marathon, not a sprint. Stick to your plan, even when markets wobble. Use downturns to buy more, not to sell in fear. Wealth is built slowly, steadily, and with purpose. The formula: start early, diversify, ignore noise, invest with intent. That's the mantra for financial success. As you build wealth, follow the rules, especially with cash. The government limits large cash transactions to fight tax evasion. Accepting or repaying loans above $20,000 in cash? Not allowed. Penalties are steep. For property deals, cash payments over $20,000 are banned. Business expenses over $10,000 in cash aren't tax deductible. Use digital payments, checks, UPI, bank transfers. A shopkeeper who pays in cash loses tax benefits. Digital payments keep you compliant and save money. These rules promote transparency and fairness. Embrace digital. It's safer, easier, and legal. Play by the rules and your wealth will grow securely. India is no longer just a consumer of foreign brands. We are creators and competitors. Indian companies like Tata and Mahindra are global players, acquiring iconic brands and innovating at home. In tech, Indian platforms rival global giants, solving local problems with local insight. Make in India is more than a slogan. It's fueling jobs and pride in homegrown products. E-commerce empowers small entrepreneurs nationwide. The Indian consumer now demands global quality with a local touch. Competition drives better products and prices for all. The brand battle is fierce, but the real winner is the Indian consumer. This is a sign of a vibrant, maturing economy. India's confidence is rising, and so is its global influence. Indian single malt whiskey, once unthinkable, now world-class. Brands like Amrut and Paul John win global awards, challenging Scottish legends. Indian distillers use climate and innovation to create unique, acclaimed spirits. This mirrors India's broader rise, bold, ambitious, and globally respected. The lessons for investors: learn from Buffett, invest long-term, focus on quality, ignore panic, start early, diversify, and follow the rules, especially on taxes and digital payments. India's future is bright, a young, growing nation full of opportunity. Markets will fluctuate, but the long-term story is strong. By investing wisely, you join India's growth journey. Raise a toast with an Indian single malt to enterprise and a bright future. Thank you and good night. Shubhratri. Jai Hind.